Wesley, thanks for being here. What did you think about, obviously, a majority, more than half of the Tesla vehicles are still produced in China. I know we have factories all over, but China is still a really big part of the Tesla story, right? So why the trip and what came of it?
Well, so look, China is the world's largest auto market, and to stay on top, Tesla's the world's largest market cap auto company in the world. You've got to grow in China. There's three pieces of big news. First, Tesla is on track to sell more cars in China than they've sold in the US in 2023. So the market's exploding there. Tesla's front and center. Second piece of good news is Tesla can manufacture cars in China more cheaply because of lower battery costs. And Tesla is now manufacturing more cars in China and importing them to the US and Europe because they get greater profits. 54% of all Teslas were made in China, as you said. Third, Tesla's doubling down in China by building a large gigafactory. So they're no longer just an auto company. They're selling these large batteries to utilities, large companies in China. So if you're an investor, more revenues, more profitability, going to new markets like energy, what's not to like?
Welcome back to another one of our exciting episodes where we take you on a journey to analyze facts and data, check predictions, and seek answers to the ever-mounting questions about Tesla's valuation. In today's video, we will be discussing the very issue that every Tesla investor should be paying attention to. This is one factor that could hinder Tesla's chances in one of its biggest markets. If you are a Tesla fan, then you know that Tesla needs everyone in its business hubs in order to make sales and increase revenue. For Tesla, every car market matters, so whatever affects any of these could have a significant effect on the automaker's output. American venture capitalist and entrepreneur Steve Wesley shares what could be Tesla's biggest risk today, the very issue that could harm a significant part of Tesla's hard work through all these years. Let's listen to this.
But one thing you have to worry about if you're a Tesla investor is what happens if there's ever a real chilling in relations between China and the U.S. And I think what Tesla is already starting to do is, on the one hand, make sure they're forging the best possible relationships with China, employing a lot of people. But on the other hand, they're rapidly building facilities in Monterrey, Mexico, doubling production capabilities in Austin and Berlin. And there's talk now about Tesla building new plants in Canada and other countries in Asia. So Tesla is building quickly. It's going international faster than the others. If you ask who are Tesla's major competitors, it's really the Chinese and Volkswagen, and some of the American makers that we all know and love are falling a little behind. They're going to have to put it in higher gear.
Political tensions between the United States and China have increased in recent months. The standoff between the first two economic powers is becoming rather tense. These tensions, experts say, are likely to have consequences for American companies doing business in China, of which the EV giant Tesla is one of them. The Gigafactory in Shanghai has become the epicenter of production of the Model 3 and Model Y, respectively, the Austin company's entry-level sedan and midsize SUV. Tesla aims to at least double its production capacity in this factory, which currently can turn out over 750,000 cars a year. In 2021, more than half of the 936,172 cars Tesla delivered worldwide were produced in Shanghai. As a result, China, the world's largest automotive market, is key to Tesla's goal of producing and selling 20 million vehicles a year by 2030. Hello everyone and welcome back to Tesla Tomorrow. China is the world's largest automobile market, with a rapidly growing middle class and increasing consumer demand for electric vehicles or EVs. The sheer size of the Chinese market presents a significant opportunity for Tesla to sell a large number of vehicles and generate substantial revenue. The Chinese government has been actively promoting the adoption of electric vehicles as part of its efforts to reduce air pollution and dependence on imported oil. It has implemented policies such as subsidies, tax incentives, and license plate restrictions that favor electric vehicles. Tesla has benefited from these supportive policies, which have helped boost its sales in China. In terms of manufacturing and supply chain advantage, Tesla has established local manufacturing operations in China, including a gigafactory in Shanghai. Will the automaker be able to maintain this performance in China? Keep watching to find out. But before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. Tesla's Shanghai factory allows the automaker to produce vehicles locally, which not only reduces production costs, but also helps them avoid import tariffs. Local manufacturing also enables faster delivery times to Chinese customers, further enhancing Tesla's competitive advantage in the market. Therefore, it is a solid fact that Tesla cannot afford to lose its Chinese market. Tesla is one of the automakers that would have the most to lose from an escalation of tensions between China and the United States. It is in this light that an analyst asked Elon Musk during Tesla's Investor Day about what the billionaire thought of the political tensions between the two countries and how Tesla intended to increase its market share in China. Responding to this, Musk claimed that there isn't much of a risk in this, adding that the car company creates jobs and contributes a lot to the local community. He said, "We created a lot of jobs with the factory and our supplies, and contribute a lot to the local community. As long as we are needed in the country, I don't see much of a risk." According to Tom Zhu, who is Tesla's head of global production, there is actually nothing to worry about for Tesla. The strong demand for EVs in China makes the country a global leader in electric vehicle adoption, driven by concerns over air pollution and government support for clean energy. Chinese consumers have shown a strong appetite for electric vehicles, and Tesla's brand image as a premium electric car manufacturer have resonated well with them. This demand has propelled Tesla to become one of the top-selling EV brands in China. China has invested heavily in building a robust charging infrastructure to support the growing number of EVs on the road. The country has a vast network of public charging stations, including fast charging stations, which has helped address one of the key concerns for EV adoption. Similarly, there is the technological innovation. The Chinese EV market has seen significant technological advancements. Domestic automakers have been investing in research and development to improve battery technology, range, and overall performance of electric vehicles. However, the EV market is highly competitive, with numerous domestic and international players vying for market share. By establishing a strong presence in China, Tesla can compete directly with both Chinese and foreign automakers. Additionally, Tesla has forged partnerships with local companies, such as battery supplier CATL and charging network operators, to strengthen its position in the Chinese market. China is also becoming a hub for electric vehicle innovation and technology development. By actively participating in the Chinese market, Tesla can tap into the local talent pool, research and development capabilities, and collaborative opportunities with Chinese tech companies. This allows Tesla to stay at the forefront of technological advancements in the electric vehicle industry. Tesla's Chinese market is crucial due to its size, government support, manufacturing advantages, strong EV demand, competition, and the opportunity for innovation. By effectively leveraging these factors, Tesla can continue to expand its market share, drive revenue growth, and solidify its position as a global leader in the electric vehicle industry. Although there are still fears as to what the aftermath of the U.S.-China tension will be, it is important to focus on Tesla's performance in China, as well as the numerous opportunities that awaits it. What are your thoughts on this? Let us know in the comments section, and don't forget to tell us what your valuation on Tesla is. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.